Good morning, everybody. We'll just give a couple more minutes for people to join. Good morning, everybody. Thanks so much for joining us again for another ASSC talk. I'm really delighted to be welcoming today Grant Seaton, who many of you will have met before, and also Margaret and Jonathan Mitchell from DM Hall, who are going to help us kind of look at some opportunities and how to fund expansion for our businesses. Because we all know that we've been facing huge challenges, but it's also important to look to the future and see that we really do have huge opportunities ahead of us. We've so much to look forward to in delivering success, not only for Scotland's self-catering sector, for tourism as a whole, creating a better place for us all to live in and work in, and for the world to visit us. As a sector, we must continue to develop and deliver an innovative, visionary and fully sustainable offer that doesn't react to demand, but proactively and creatively anticipates the aspirations and needs of future visitors, whilst at the same time protecting and enhancing communities. Self-catering is vital to sustainable tourism across Europe and beyond. Staycations, holidaying at home, not getting on a plane will all make a huge difference to our carbon footprint on Earth, way beyond COVID-19. It's something we're all reflecting on and thinking differently about as we witness our planet in crisis and on the back of COP26. Self-catering homes are a solution to sustainability, not a problem. Our sector's got a fundamentally positive impact on other tourism sectors, visitor attractions, activity providers, restaurants and cafes, and of course the onward supply chain of cleaners, laundries, service providers. I don't need to go on. How we live and work can represent the beginning of a bold new approach, putting our communities, our people, our visitors, our businesses and our environment at the heart of everything we do, and ever more so in a post-pandemic environment. In 2021 in Scotland, we've seen a significant increase in domestic tourism since reopening in the summer. Many guests were chosen to travel domestically for the first time, and self-catering has absolutely been the accommodation of choice. We're no longer the alternative. We are now the accommodation of choice. Now, of course, international travel is likely to recover strongly in 2022, but I'm confident that we're going to see strong demand for domestic self-catering in Scotland. So how can we use this opportunity? We can invest in our businesses. We can grow our businesses. This is, as I say, the accommodation of choice. How can we work out a way to take advantage of this global catastrophe? So we're looking at opportunities and positivity. I'm absolutely delighted to be joined by Grant Seaton, Senior Commercial Manager from the Cumberland Building Society. Grant has a genuine interest in the industry and is passionate about helping businesses to succeed. I can personally testify to this. So Grant, welcome, and over to you.
Thanks, Fiona. I'm just going to share my screen to kick us off. Hopefully everybody can see that. So yeah, thank you very much for that introduction, Fiona. Absolutely delighted to be back on another ASSC talk. I think it was possibly about 12 months ago since we've done the last one. The Cumberland are great supporters of the ASSC and everything that you stand for. It's been great to see the support that you've provided all your members over the last 18-24 months. I'm sure it's been invaluable to them, all the information that you've been downloading on a regular basis, as it has been to us as well as a provider into the industry. So the Cumberland, right back from Cumbria, but thankfully we're not just stuck in Cumbria, we do stretch all over the UK, including Scotland. The title of my presentation today, The Road Ahead, Looking Forward to 2022, hopefully is a not optimistic look into the future, and hopefully continued support that holiday let owners receive, and the Cumberland that clearly want to be there in your corner looking into the future. But before we do look into that 2022, I think it's always a positive thing to do to reflect, just to see what's happened over the last 18-24 months. So what I'm going to share here today is nothing earth-shattering. I'm sure it's things that you've already considered. However, you've gone through an extremely busy time recently with, I'm sure, demand being so high that you've sort of had head down and tried to make the most of the opportunity. So taking that reflection back over the last 18, 24 months, how has your business been affected by the pandemic? What changes have you had to make? What changes have you then gone back to on since the pandemic, or what you may have kept some of the changes that you made as you entered into that? Did your business receive enough support during that pandemic as well? And what was that support look like? Would you know what to do in the future if something was to happen again? What did you learn from that at the time? And did the pandemic present any opportunities for your business as well? So is there something that you saw through that period of maybe the lockdowns where you were thinking what the next step was for your business that you've maybe not got round to doing that as yet? So it's a lot about the planning aspects of it. So reflection back on 2020, 21, but looking forward into the future, which will create both challenges, we think, but hopefully many opportunities as well. Starting with the challenges, and the first two on the left-hand side there, managing finances, mortgage payments, but also any particular debt or HMRC repayment that's maybe there within your business. Now, as a financial organisation, what we would say on both of those points is communication is key. So if you were looking at your planning of your finances over the next 12 to 24 months, are you in dialogue with your trusted professionals? If you have got finance at the moment, are you keeping contact with your bank to make them aware if there is any sort of headwinds coming down the line? Have you, based on some of your cash coming through at the moment with higher demand for your business, are you keeping cash to one side to allow for any downturn in the future if that indeed comes? And that links into the next one, the risk of further lockdowns. Is there a contingency there? Have you got your plans in place should something come down the line? Obviously, we're hoping for that not to happen. And the final challenge there, which probably shouldn't be at the bottom of that pile, the impact of licensing changes or potential registration coming down the line. Clearly, you've got the SSC in your corner there fighting for you to make sure that it's of a level which is responsible for the industry, really, and it doesn't impact on your ability to be able to deliver. So they're the challenges that are coming down the line. But optimistically looking at what is there for you. So what business expansion, clearly the demand has been so high over the last 12 months, demand outstripping supply at times. So is there a chance for you to make the most of that? There will be people who have never holidayed as much in the UK who have now found some areas of Scotland that they maybe would never have found if they were going on their annual holidays abroad. So can you make the most of that demand? Is there any opportunities to make improvements to the property? I suspect that you've probably looked at that quite a bit, especially during the lockdowns. Being a busy industry where there's people coming in and out of the property all the time, did that give you the chance to really stare at your property or your offering and think, what can you do? Did you manage to get through all of that before it eased back up and you've got into high activity in your business again? So is that something that you should be considering? Maximising the revenue and management of occupancy and pricing is more down to the dynamic pricing side of things. If you haven't taken advantage of that at the moment, is that something you need to think about going into next year? Clearly, when the demand's high, do you keep your pricing benign or can you price up? Clearly, we've seen some very high tariffs being charged across the industry, and it doesn't appear to have put people off at times with the demand being so high. And finally, you can't ignore the digital platform as well now. Is your business relevant for the digital age that people can find, source your property? And it's all about convenience now, I guess, to be able to pay and to arrange for everything that they want on their holiday when they come to property. So that's some of the opportunities that we see. As I say, nothing earth-shattering, but hopefully you would need some support potentially from a financial organisation. So just to lead into what the Cumberland's about, if you don't know already, clearly we've been part of the SSC for a while now, and we've been lending to hospitality for over 20 years, with a strong presence in the holiday let and self-catering side of the business. So we have a dedicated team who claim to be very knowledgeable in the holiday let sector, as we've been involved for that period of time. We are friendly and professional, and we will take the time to understand your business. It's not just about the numbers all stacking up. We want to be there to support you through your journey as a self-catering holiday let owner. We have a team structured in such a way that if your business feels like it needs some support with a relationship manager structure, then we can provide that. So if you're talking about expansion, if you're maybe going from 3-4 properties and want to build over the next 3, 4, 5 years, we can get a relationship manager with yourself so that we can understand your business, and you're not having to explain yourself every time you come back to talk about your business. We will get to understand that. The geographical spread of our team means we have people based in the central belt of Scotland. So we're not too far a drive from anybody should we need to come out to your property and come and sit down and have a cup of coffee and a chat about what is possible for your business. And then finally, we work with a number of trusted professionals, such as accountants, solicitors, and surveyors such as DM Hall, who we're delighted to be on the call with today as well. And it may be that you come to us with a query. We might not know all the answers, but we sure should be able to signpost you into the professionals who can guide you on that. And what we will tend to do is work together with them on some of your projects. We've absolutely no qualms with doing that at all. The main aim of being giving you the best service and the best support that we can possibly give you to succeed in the business that you have. I've really whizzed through that very quickly. It may have spurred some questions off the back of that there. I'd say nothing particularly rocket science, but happy to take any questions. I think we're going to leave the questions to the end of my presentation and DM Hall's as well. If I hand back to Fiona, please.
Thank you, Grant. We are indeed going to have some questions and answers at the end. So if you do have any questions, do just pop them in the chat and we'll get to that after we've spoken to Jonathan and Margaret. I can testify that Cumberland is a fantastic business to work with. They've been supporting my own business financially for, I think it's 13 years now. And I personally wouldn't go anywhere else, but there are other options available after all. But no, thank you so much, Grant. That's really inspiring. I'm also really delighted to be joined by Jonathan and Margaret Mitchell, who are they're both commercial valuation surveyors from DM Hall, another valued partner for business of the ASSC. They're very much part of a team whose knowledge and understanding of the Scottish market enables them to provide the right advice to help maximise value from your assets. DM Hall have got lots of strings to their bow, so do have a look online. We've got a dedicated website page for them. So look at kind of what they can do over and above what's discussed today potentially. But we're absolutely delighted to bring their expertise to your business. Margaret and Jonathan, handing it over to you.
Thank you very much.
Thank you. Good morning. We just want to firstly thank ASSC for inviting us along to present to you today. Firstly, I can introduce myself. This is Jonathan, my colleague, also my husband, Jonathan specialises in hotel letting accommodation along with licence and leisure valuations. He has many years experience in the field, having started his career with DM Hall in 2000 before embarking on pastures new south of the border, taking up national roles covering the whole of the UK, before returning to DM Hall in November last year. I head up DM Hall's business sales team, where I deal with both purchase and sale of trading assets. I also started my career with DM Hall in 2007 before moving south of the border to undertake a licensed valuation role with Pinders before returning to DM Hall in 2014 where I specialised in commercial agency. DM Hall were established in 1897. We currently have 235 staff and partners in 24 offices across the whole of Scotland. We are known as a premium independent surveying brand in Scotland and are on a number of lending panels. I'm moving over to Jonathan, who'll cover the current market.
Yeah, I mean, there's no point in dwelling greatly on the first bullet point there. It's been talked about so many times over the last week, well, and will continue to be so. It'll be one of these conversations that'll never die. But I mean, the effects of COVID have not necessarily been entirely what we expected. I have to say the current market is actually looking remarkably positive, all things considered. I mean, it's well said, it's well documented, but I mean, there's massive differences in the effect that the COVID epidemic or global pandemic has had on the market in comparison to the 2008 crash, which was, I would say, I think a much more impactful or had more impact on the self-catering market. The cash hasn't disappeared. The banks are still have money. They're still willing to lend to the right asset, to the right opportunity. And we've seen that all the way through 2021. Since the lifting of the last restrictions, people have money in their pocket. They're desperate to spend it. They're desperate to get out there. Grant's touched on it already. We are seeing just such a huge surge in domestic tourism that it's fantastic. Now that's not new. That was happening before 2020 as well. I mean, if you look at the statistics for Visit Scotland, they were showing that international tourism was still important, but it was a real drive in domestic tourism. It was up massive percentages towards the end of 2019. Unfortunately, I mean, Visit Scotland are now putting out new bits and pieces of data, but it's all, I mean, I wouldn't dwell on it because it's quite not necessarily positive, but that reflects the situation we've gone through. I'm a big believer in that it's not a staycation. A staycation to me is when you stay at home for a trip. But I do think that this surge in domestic tourism has had just a wonderful impact and has really managed to offset what had been a pretty torturous time for most. The 2021 sales that we are seeing going through, we are seeing an awful lot of bed and breakfast, guest house accommodation, self-catering accommodation, trading as or selling as going concerns. Now, to me, that's a real positive that the market is returning, and that what you guys are doing on a day-to-day basis is really showing through in the returns that you're making, the accounts that you're able to produce and provide, showing an increase in turnover from previous years, which has meant that demand's just increased no end. Return of international tourism is going to be important, and I can't deny it, and I can't lie that I've heard more and more American, Italian, Spanish, and various accents kicking around as I've been going around. I was up in Orkney yesterday looking at 2 or 3 bits and pieces, flew up, flew down, and there was 2 or 3 different accents being in discussion on the plane, which was good to hear. It's been a long time since I've heard quite such a mix. Clearly tourism as well, clearly with their bags, their rucksacks on their shoulders, and vast quantities of bags going into the hold as well. It's not an easy market. It's not a boom time, but it is returning. What is evident and what I have really seen is that the effects of COVID have blighted us and impacted us heavily, but for a specific period of time. It's almost like when we can now look past it, it's happened, and whilst it's still in the background, we are having to look at it on the basis of this is something we are going to have to live with going forward, and it'll be, we need to get our boosters and whatever else. In terms of what's next for the current market, I do see the return of international tourism really helping. there's going to be a drive to quality. Gone are the days of being able to offer up a rundown farmhouse or rundown bothy in the middle of nowhere. And your rundown bothy in the middle of nowhere has got its own charms. That's maybe a slightly different thing, but offering an accommodation that's not up to standard. We live in such a world these days that it's so easy to compare properties with properties. I mean, the boom over the last 15, 20 years of the booking platforms has really brought to the fore that you have to be at the top of your game, employing maintenance and employing capital expenditure to make sure that what you're offering is up to the right standard and remains competitive. Bear with me 1 second. There we go. I can't stress enough that the market is good now, and it is probably a good opportunity to start considering that next move in the industry, and really seeing this as a stepping. I mean, we've obviously got various different sizes of operator on the call at the minute. We've got guys that'll have 1, 2, maybe 3 units, up to guys that I think have just shy of 60 properties. So I mean, everybody has their own individual requirements, everybody has their own individual needs, and I don't want to speak to a lowest common denominator position, but likewise I would like to make sure that no matter who it is, you're making the right choices before you do consider that next opportunity. Clearly things that are really important is considering your due diligence procedures before you go, and looking at the asset and how easy it is to manage for you in conjunction with the other properties you might have. Now, this is the self-catering is just a fantastic sector. It really is a stepping stone on occasion, where you could start with your own self-catering and then moving up the chain and expanding and increasing bed numbers and just moving on to different styles of assets. But keeping it to looking at the self-catering market, a key thing really is manageability. If you are looking at a house in Nethy Bridge and then deciding you're going to buy one in Kinlochbervie, or you're going to buy one down in Southern Nest down in Dumfries and Galloway, you've got to think about your possibilities of being able to drive between these on a daily basis or a weekly basis or a monthly basis to do inspections, to make sure that the property is well looked after, to make sure that if you are employing cleaners, if you are employing somebody to asset manage or to look after that property for you, that they're doing the right job. It's always worth remembering that despite it looking like a great property, it might just not be the right opportunity for you on that. Also, are they both synergetic? I mean, it's such a buzzword in the RICS these days is synergetic, but are you going to purchase a property down the road that's then going to step on the toes of the one that you're already operating? Is it going to cut off a particular turnover revenue stream that you might have just to feed another one? And it's not actually necessarily about expanding your business there, it's just about growing your property portfolio, which is a different thing entirely. You've also got to consider potential cost savings. Now, this is a big thing. I mean, you might pay a very similar, or it might cost you very minimally more to get 2 properties cleaned as it does 1 property cleaned side by side. So if you can start to ramp up and increase your offering and improve the number, or increase the number of properties you have, you're also into a position where you've got better buying power when you're purchasing produce, or if you have to purchase for that kind of thing, or linen or whatever it might be that you're buying. So there is the opportunity to see potential cost savings as well. Basic due diligence procedures for me really come down to making sure you do your homework before you go. I mean, this is, like Grant said, it's all coming back to relatively basic stuff, but a lot of it gets lost when the heart starts to take over the head, and you start to charge down a road that you haven't actually thought through from a commercial perspective, rather than from a I would just love to own it perspective. Now, they both have their merits, but first and foremostly, make sure you see proper accounts information. Get the KPIs if they're available. I appreciate not everybody does it, but if you come to sell your own business, it's a good thing to have in your own mind that the better accounting information and the better key performance indicator information, occupancy, average rates, I mean, just all your information that somebody else, that you would want to see, somebody else would want to see. So make sure you get your hands on all of the information that you can before you make any decision. The underlying property value in the vast majority of cases of a self-catering business really goes to underpin what the overall value is, and what would make up, what would influence heavily upon your decision-making process. But a well-run, well-managed, singular group, large group of self-catering accommodation can generate serious revenue that somebody else would be willing to pay for. Now, from our perspective, from valuation and from business sales perspective, we are really looking at things more akin to, we look at what they would call a reasonably efficient operator position. So if somebody was to put this on the market and you were to sell it, how would a reasonably efficient operator run? And we wouldn't, rather than focus so much on the turnover, it's the adjusted net profit, or the EBITDA, that we get more excited about. And let's be honest, I like to keep it cloak and dagger and make me mysterious and make us sound like we're doing something really intelligently difficult. But at the end of the day, it's a judgment call on the underlying property value, plus an element, a multiplier on the sustainable, fair, maintainable operating profit, or EBITDA, going forward, that gives you your value. So if you go in with the mindset of knowing where the value is being driven from, it then gives you an opportunity to, one, negotiate. You know, I mean, if the price is, you're going in and go, well, I know that the property's at half the price you think it is. I know that there's asbestos. I know that there's other issues to do with flooding or whatever it might be. You can then go in and drive the price down. If you just go in cold, going, this is brilliant, I love it, your heart takes over and you end up in a position that you don't want to be in. It's also a great, I mean, listening to Grant speaking there was fantastic. It's been a long time since we've had such positive news in terms of the availability of finance. And Cumberland are right at the top of the tree for that. And I don't say that lightly. I mean, I've dealt with every bank over the last 20 years and know them all inside out. And when you know somebody that's knows what they're talking about within an institution or a financial background, it makes just getting a deal across the line that much easier. The deals are there to be done, and right now the finance that is available does make it a good opportunity to get out there and have a look and see what else is available in the market sector. Like I say, even just dip your toe in. I'll come back to it, but that is something that I do like to stress to anybody I speak to, is we're here. You know, we're here. Pick up the phone to us. We might not get an instruction, or we might not get a valuation, or we might not get whatever from you straight away, but it's the building blocks of a long-term relationship that we're looking at, and we're more than happy to cast our eye over a potential opportunity that you might have, and say, yep, it's worthwhile progressing or proceeding, or even getting involved in, or otherwise we can turn around and say, no, it's something that you need to steer away from, massively avoid with it at all costs. But usually that's not the case. There's usually a happy medium somewhere in between. Like I say, we usually aren't when it comes to acquisitions, which is what we're really talking about at the minute in time. So if you're looking to expand your business, we should be up there at the very start of your process and your journey on your expansion. It's something that we deal with regularly, whether it be business sales, whether it be valuation, and we have an understanding, we have a knowledge of the market, that we know who is active, we know who's looking to dispose of stuff, whether it be on the market now or not. And even if they're not, we've usually got a contact that we can say, yep, we're happy to speak to you. We're also happy, now this is happy, that's the wrong phrase, we also can act for you in the negotiations. Not everybody, but an awful lot of people find that part particularly difficult. They feel that they are upsetting or offending or potentially annoying the person they are negotiating with. Trust me, we don't have that worry. We'll be very, very professional, very fair, and very down the line, very matter of fact, and it will be fact driven and fact based. But we can act on your behalf in terms of negotiations if you are looking to purchase. Likewise, key to a lot of this, especially from a finance perspective, is evaluation. don't leave that to the last minute, but do speak to us in the first instance. There are some lenders, not all lenders, but some lenders who will view us as being, or will, if you get your own valuation carried out prior to them being instructed, or prior to them instructing for value for finance purposes, there can be an issue with conflict of interest, and you may end up getting charged twice for a valuation. That's the last thing we would ever want. And what we would say, it would be one from us and one from somebody else, and you end up with that, and a valuation is an opinion. So you end up with that concern that you might end up with a different opinion from two different surveyors. Always speak to us in the first instance. We know the value, we know that the lenders that are out there, we can tell you if they'll accept a pre-instructed valuation or whether they won't. And under no circumstances will we take an instruction where we think that you're going to be out of pocket for no reason at a later date. We've got additional services which the ASSC are well aware of, and I think are using themselves in the background, and to do with title searches, EPC, planning. The planning is one we don't push enough. We have got some fantastic, we've got a town planner based in Bridge of Allen who's exceptional, and we've got some brilliant guys that can do architectural drawing work as well. Anything at all in that vein that if you need help with or assistance with, our contact details are at the bottom there, and I'm sure, I think that's getting all shared later on. So I have probably overstayed my welcome, as I tend to do. I could do this for another 2 hours if you wanted, but I suppose I better not, and I'll hand you back over just now.
Thank you so much, Jonathan, Margaret. I mean, it's just brilliant. What I love about our partners that we work with at the ASSC is that they're real people that can give you real impartial advice, and they also talk to each other, which is really quite critical. So rather than you being faced with this huge anonymous big business, you can actually phone Jonathan, you can phone Margaret, you can phone Grant, and that's how I like to do business, and it's how I think, you know, what we can bring to the table as sort of facilitators to help you as a small business or as a big business. Really, really wise words. And also it's important to think we're not necessarily just talking about acquisitions, we're also talking, going back to what Grant said, you've got to be the top of your game. You've got to make sure that your business is acting to the best ability that it can. So maybe look at how you can improve your business. Do you need to redo the windows? Do you need to improve the heating system? At that point, you might need to go and get finance, at which point you'd phone, you know, give Grant a call and he'd put you in the right direction. Then he might come back to DM Hall and look at the EPC implications of that. There's a kind of joined up conversation, but basically what I would absolutely suggest is you pick up the phone to these guys and ask their opinion, and then that conversation can be undertaken and they can help you. It's sometimes quite hard to know where to go to ask these questions, so I hope this has been helpful. We do have some questions that were submitted in advance of today. Margaret or Jonathan, I suppose, what are the areas of growth that you're expecting to see in the sector in the next 12 months? Is it acquisitions or is it improvements, or what are you saying?
I think a bit of both is the honest answer. It's not a one trick pony, for want of a better phrase. It's a real change in mindset from self-caterer operators that they need to really focus on driving the value of their business by being commercially minded, by keeping a better track of accounts and making sure that the accounts are presented. And I think what you'll see is when and if and however the legislation changes for Airbnb and restrictions that are put in place, you're going to find the market fragmenting, and you're going to find the guys that can offer the right properties, having the right set up to the right requirements, being able to charge a premium for their property over and above those that probably have to leave the market segment if there's particularly onerous restrictions put in place that prevent certain things from happening. Now that's an if but and maybe question, and what happens at a later date. I mean, you literally could throw a feather in the air and watch which way it goes in the wind if you wanted, sort of thing. But I think there is good growth to come from it. I think, like I said before, 2020, before even the COVID crisis, domestic tourism was on the rise. It was going through the roof. And if you're maintaining your property, if you're spending the capital expenditure on it, that you're doing the roof, you're doing the windows, and you've got a property that can compete with the warmth of a home, but the quality of a hotel or a boutique offering, then you're going to do exceptionally well in the coming years, I would have thought.
Thank you. That's so true. I mean, I suppose, yeah, the old elephant in the room is licensing and planning control zones, my favorite subject. So Grant, I mean, we've spoken about this and I've presented to the Scottish Government. We do have a slight issue if they do continue to go down the proposed route that they're thinking of, which they won't if I've got anything to do with it, but that's beside the point. What happens if licensing comes in and we're all faced with renewing our licenses every 36 months? Are you going to carry on lending to our sector? How does that look?
Yeah, it's a good question. If licensing comes in and you've got we would have a customer that's obviously got that additional cost to bed in, that's a discussion to have with them. If there was restrictions put in, so no letting zones, potentially that's a bit of an issue, because we may have lent to somebody on the strength of self-catering income coming in, and then if they created no letting zones where they were unable to deliver letting through that property anymore, then obviously it changes the makeup of that particular investment property. So if it was all able to be let on a long-term let as opposed to a short-term let, then that obviously changes the makeup. So I think that was the discussions that we've had previously, Fiona, which was that's a point that needs to be made to the government, because all of a sudden they could be turning something that was able to turn, let's say, £30,000 a year in letting income to something which maybe on a long-term let is only doing £6,000 a year. So clearly that's something that they need to be thinking about. So we're hoping there's some sense take on that topic, and the fact that let's not try and paper the cracks of maybe lack of local housing with putting a barrier on people who are creating some economic strength to some of these areas as well. So yeah, it's
ongoing discussion.
Yeah, it's one that's on. It's obviously high on your guys' agenda. If something was to come down the road like that, again, I go back to my presentation, which is have an early discussion with your financial provider. If you can foresee anything like that coming down, we're there to support. So the last thing we'd want people to do is bury heads in the sand and think what we're going to do, panic. It's early discussions with your provider, as I say, and we will try and work through with anybody if they're faced with an issue like that.
But in the meantime, you're going to keep banging the drum about it to the Scottish Government, aren't you, Grant? Excellent, thank you. So assuming that that's not going to happen, because we're going to persuade them to introduce proportionate, targeted and sensible legislation. If you've got a property that's restricted, there's a good question here. Do you lend to holiday let restricted property? And can you explain what that sort of means?
Yeah, we do. So not all financial providers will look at that. So just to take it back a step. So you may have restrictions on planning when it comes to properties sometimes, which might stop it from being available as a residential property. So it might be holiday letting only. We find that sometimes on some of the larger sites as well, where there might be 40, 50 properties on there, but there's the restriction is holiday let only. Now we can look to lend on that. We take advice from our good friends at surveyors firms to give their opinion on what that might do to the valuation. Now that might mean that the valuation comes in a little bit lower than if it had full residential use. However, it's still got value. I think the problem sometimes lenders have with that is, oh, it's not residential, so it's not fully residential, so we can't lend in that. I think that's where our sort of expertise in the market helps, because we understand the value of it. We know it will have a value if it comes to be sold on for somebody else to come in. So we're comfortable with that, and we would look still lending up to 75% of the market value of the property as well. So we don't restrict anything on that. That would be the norm. It's 75%. So if there is anybody considering that, more than happy to speak to them. It might be a restricted market, so that's where, you know, if they can come to us, we can have an early discussion with them to let them know what we can or can't do.
Brilliant, thank you, Grant. We've got a couple of really good questions from participants today. Sue is saying, we've got a 3-bedroom furnished holiday let in rural Highlands, which we're thinking of selling. We've built the business up to being almost fully booked all year round. Well done. So think it should be worth more than it was when we bought it 7 years ago. We've also replaced the windows, heaters, roof. Ouch. Having never sold a business, I'm wondering if it's worth us contacting DM Hall for evaluation, or are we too small? I would say yes.
Absolutely, yeah, I would agree. I mean, nobody's too small. Let's put that out there. We're not big ogres and beasts. We're happy to speak to anybody here. So, your single property that, I mean, you've obviously put your heart and soul and life into it for the last hour long, especially to get up to occupancies like that. We are more than happy. The details, like I say, are on the slides, which I think are getting sent around. Give us a call when you're free, and we can have a chat. We would certainly look at it, marketing it for you, and we can discuss costs and all that kind of thing at the time. There's no upfront cost in that kind of thing. It would just
there's 2 different options. You can go down a valuation side, which will tell you where, if you were going for lending or for a bank, Jonathan would do, or the other side would be a marketing report, which would give you an opinion of how much we think you could achieve if you put it on the market. So it's not a red book valuation that you get lending on, but we do the same things. We go through the accounts, we work out an adjusted net profit and the like. So there's 2 different options, and we're more than happy to come out and do like a marketing report, which also breaks down any like other questions you might have with regard to that side of the business. But we're more than happy to come out, see you, give you a call, and we can discuss it in more detail.
Can I just pick up on something very, very briefly there? You've mentioned that you've done the roof and the windows and everything else. It's always worth bearing in mind, and I'm not trying to be negative in any way at all, but cost doesn't always necessarily equal value on that front. Some of these works are essential or necessity to allow you to continue to trade and get the income. So sometimes we put a lot of money out in the first instance to get to a position where we have an income generating opportunity. And I'm not saying that you'll be behind where you were 7 years ago. The world's a different place entirely, but it's always worth bearing in mind when you do go to do it works. Initially, it won't. If you spend 100,000 on a roof, it's not going to add 100,000 necessarily to the value of the property, unless there was no roof there in the first place and you got it for next to nothing. That's a different story. But that was me digressing. Apologies.
No, that's totally fine. And there's another one for you guys. I've got a complete renovation for a future holiday let. Can DM Hall undertake structural survey and advice on insulation, heating, planning, etc.?
We have services. Our building surveying team can definitely do a full kind of conditional report. We don't go down the structural element. That'd be more a structural engineer. What was the other bit of it? The planning advice, installation. So our EPC department would probably be the right guys to speak to with regards to insurance, installation, and they're part of the planning team. So it's worth getting in contact. We can put you in the right direction and speak to kind of the guys in the right departments. That's not a problem at all.
Grant, one for you, I suppose. Is there an advantage to selling a holiday cottage as a business, or with the boom in residential sales, could you achieve more selling it as a residential? And is that something you could advise on?
That's an interesting one at the moment. I think if I look at an example of the Lake District down here at the moment, I say down here, I'm in the southwest Scotland, but we do a lot of lending in Cumberland, the Lake District. The value of residential properties has shot through the roof. And that's probably for 2 reasons at the moment. You've got people moving out of urban areas out to rural because of being able to work in different locations now without feeling they have to be 10 minutes from the office. And you've got the self-catering boom, so lots of people are buying property up for self-catering. So supply and demand would state that, you know, the values are going up in the Lake District because of that reason. That doesn't really answer the question, so that's quite a political answer, I think, that I think there'll be merits on both sides, how you market it. The way, and this is probably one for Margaret actually, to say how she would look to market it, but I think you would market it on both, or maybe on a 3 basis, which would be main residential. It could be a nice second home in a popular area of the country, or it's got a holiday let income come off the back of it, and it might even be, sometimes you might have a main residence with holiday let potential attached to the property. There's so many ways that you can sell a property now, and there's so many people looking to buy. Sorry, Margaret, I think I just butt over you there.
It's perfect, because a lot of these websites, if you were selling it as a commercial holiday let, it'll go on, if it was on with us, it's going Rightmove, it goes on Zoopla, it goes on a lot of the websites that it would go on anyway as a residential property. So you're not going to kind of cut your nose off to spite your face by putting it with selling it as a business rather than as a residential property, because a lot of the times people will do a search of a property in a certain area, and so if it's a running business and they want to convert it into a family home, they'll still contact you to view it. Likewise, if you sell it as a residential, someone might see it as an opportunity to, right, well, we'll continue it on. It also depends on what your planning is. If you sell it, if you've got the planning in place as a commercial holiday let, would you then have to get offers subject to conversion back to residential? So there's different ways, and also how many bookings do you have in the system? Do you have quite a lot coming forward that you can actually sell it as a growing concern? And ultimately, if it doesn't work that way and you wanted to then move it on, there is still that opportunity to sell it vacant once any bookings have dried up and you're not maybe wanting to take it on a bit more. But there is definitely merits in selling it in both ways, and the demand will be there. People will do a search of the marketplace, and if you want to board up, boards can go up, and people will always contact the agent if they see a board. But half the time, a lot of people, if they're selling a business, don't want a board on the property because they think it will be detrimental to their business, which if you were wanting to book in a year in advance and you see it's on the market, you think, well, actually it's a bit risky. So there is merits, but give us a call and we can talk through it in more detail and have a look at the property that you're talking about, and we can give you a better advice one-to-one about it.
I think that's the key here, isn't it? Knowing that there's somebody you can actually go and get advice from. I mean, I did put our property on the market once, and I didn't know what to do. You don't know what to do. So it's actually really valuable to know that there's people you can speak to. I took it off the market, but that's beside the point. Given Subex asked, given the progress of COP, being environmentally thoughtful is going to be the responsibility of us all going forwards, and small businesses. Can you advise, I think this is DM Hall, can you advise on where the best place to look for any kind of grant funding for change of heating systems, any of that kind of ecologically beneficial improvements, if there are any these days?
Simple answer to this one is I'll hold my hands up and say no, not off the top of my head, but we know people that do, and I can get that information, pass it on to the ASS, onto yourselves, and you can distribute it, and I can also send it to Sue direct if I've got an email. That's not a problem at all. But off the top of my head, I probably do, and it's just gone to the back of my head somewhere. But I'll come back to you on that one.
That's brilliant. That's perfect. If we can distribute that information, that'd be ideal. One for you, Grant. Do you provide mortgages on holiday houses that currently don't have a mortgage on them, if we want to expand the business and maybe build it themselves, or yes is the answer, right?
Yeah, I was looking at that, and they built it themselves, which is really great. I guess the key for that one then for me would be looking at the planning aspect of the build at the time. So providing they've done that with monitoring at the time, and they've got sign off on that as a new build, then we would do a capital raise against that. That would not be an issue. And even if they haven't gone down that route initially, we can get retrospective warranties in place for it to allow us to lend against that type of property. So if I've got the right gist of that there, the answer is yes on both fronts. We could do something. if they're looking to capital raise against that to expand the business. And clearly, if they're looking to expand and buy a new property, then there's two pieces of security there we can take, which allows us to increase the amount that we can look to lend them. So it's a yes, yes, yes for me.
Excellent. I like yeses. Yeses are my favorite word. Sue's also asked, what are the implications if you're thinking of gifting? This is a really interesting one. Gifting a holiday property to the next generation, between a property being a holiday cottage or as a shore-to-shore tenancy. Well, actually, we can actually help you with some contacts for succession planning, because that is a really big one. That's a really important thing that you need to think about way in advance of gifting that property. I don't know if anybody else has anything to add, but yeah, absolutely. There's consultants out there that can help you with that succession planning, and it's wise to get it rolling as soon as you can.
I think, yeah, take legal advice, and if you've got an accountant that you work with as well, like you say, Fiona, as early as you can do it, getting the right structure in place to allow you to do it in the most cost efficient manner. That's where your accountant and solicitor working together can come up with the best plan. If they've already set up as a particular structure, then again, take some advice, because they might be able to transition you over a period of time.
Brilliant. Here's a good one. My second favorite subject after licensing is energy performance certificates. Does DM Hall recommend a residential or commercial EPC for self-catering properties? Now, can I just jump in here, because I spoke to one of your colleagues, Alan Jeffrey, just yesterday about this. And the Scottish government has said that they are going to withdraw the requirement for self-catering businesses to meet minimum standards going forwards in terms of energy performance certificates. However, when I spoke to the Scottish government about this yesterday, they said that self-catering businesses will have to meet EPC legislation. So if that legislation changes, which it's due to do so, then we will actually have to meet the minimum standards. And that's where we've got problems on our hands. Now, Alan also said that at the moment, you can go for either a residential EPC or a non-domesticated EPC. But if this is then legislated, then we might all be looking at having to get non-domestic EPCs. Am I right, guys?
Yes. In a nutshell, yes. Yeah, Alan Jeffrey's a very approachable man. He runs our energy efficiency team, and he is the absolute foremost expert on it that I've ever met. So I would suggest speaking to him with any questions. He might ramble on a bit like me and go round in circles about it, but you'll get there in the end. So.
He was dreadfully succinct yesterday. It was marvellous.
Oh, was he?
What I would add on that front is that it is currently a legal requirement for every single self-catering unit to have an EPC. So if you don't have an EPC, might I recommend that you get a residential one quite quickly, just in case, because then you won't get necessarily wrapped up into having to get a non-domestic one, which is pretty much double the price. We will continue to fight on that front in terms of EPCs and all the other legislation associated with licensing. And obviously we'll keep you up to speed on all of that. I think I'd just like to say thank you to all of you for really, really interesting discussion today. And it's so good to know that we've got companies like yours there to support us and give us the advice and the expertise that we need in terms of protecting our businesses, growing our businesses, doing, all of the things that we want to do to continue to provide world-class accommodation for our guests. We've got to carry on innovating, don't we, in order to make sure that tourism grows and our sector grows and is visionary and sustainable and all of those things. And we're not just reacting to demand, but we're actually anticipating what our guests are going to want in the future and how we can generate those experiences, those immersive experiences. I really hope that today's session has been helpful, but please do contact Grant, Margaret and Jonathan to discuss any plans or any of your issues or anything. And we'll also pass on to them your various questions. So if there's anything that you want and you don't know who to contact, just give us a shout and we'll put you in touch with anybody that we can to help you. So thank you for that. Now, just to let you know, on the 30th of November, quite kind of on the back of this, we're really looking forward to hosting our second industry partner event, and we're inviting you to our Meet the Experts. So obviously historically, we've always had an annual conference, which gives you the opportunity to meet our industry experts and our partners for business. We obviously don't have that anymore. So this is our virtual solution to that. So it gives you the opportunity to find out who we're working with, what they can provide, what services they provide, and so on and so forth. So that is on the 30th of November at 11 o'clock. And I hope you guys can make it to that event then. But in the meantime, have a fabulous Tuesday. I hope it's not raining. And thanks again for joining us today. Thanks, everyone. Bye-bye.
Thank you.